again and welcome. This is Robert Schein, Managing Director and Partner at Blanke Schein Wealth Management. Today is June 23rd of 2022. Thank you for joining us for our market insights and observations. Today I have a special guest with me, my oldest daughter, home from college. This is her college break, just a brief window of time where, you don't lay around the Schein household, you come on in. So we put her to work and she's helping us today. We're going to learn a little bit about what she has experienced her freshman year. Taylor, thank you for joining us. How was your freshman year?
It was amazing. I just completed it and I was on the USF women's volleyball team this past year, as well as I've completed 2 full semesters of macro and microeconomics. So I've learned a lot about what my father does.
That's awesome. Macroeconomics, marketing, business. I'm super thrilled. She's a D1 athlete, pulling straight A's. Couldn't be more proud. But, again, you're not sitting around. You're always going to come in and we're going to have some fun. So today I've got her reading a lot of books. This one's Women and Money. It's a great book. But more importantly, let's get to our insights and observations. So I think you have some questions for me right now.
I do, yes. Okay, so what is happening in the economy and markets right now?
So right now, financial markets have sold off year to date. Every aspect, there's really nowhere to hide. And the reason why is because inflation is really rampant everywhere throughout wage inflation, supply chain. Every company, if you're a big business or a small business, you're struggling with a higher input cost. You have to pass that on to the consumer if you can, and that's called price elasticity. You have the ability. Some companies can't. They have to absorb that. And so it's really a flux right now in the economy of where earnings or where profitability of companies are actually going to end up by year end. So quarter over quarter profitability. So markets are trading down in the worst case scenario right now. They really don't know. And the uncertainty is ultimately creating the opportunity long term. That's our process here at Blanke Schein Wealth Management because we've been through this before. But ultimately, markets are just selling off on those fears right now. So the reason why is that recession is the word of the day. You have Elon Musk and Mario Rubini that are saying recession. Larry Summers, a former Treasury Secretary for President Obama, he ultimately says we're in a recession right now. I tend to believe him as well because it's all about kitchen table economics, what you and I and what we all spend money on. And what I spend money on is education, right? That's double-digit inflation. Gas, right? All the cars that we drive, that's double-digit inflation paying at the pump. Or even food, the amount of food that your brother eats. That's double-digit inflation when mom goes to the grocery store, and she goes quite a bit for our household. And so we're all feeling the pain at the pump or the pain in the grocery store. So there's a recessionary. So the technical definition, as you know, of a recession is we're 2 negative quarters of GDP. And I know you know this. But what's cool is that once you're in a recession, once they sound the recession bell, that ultimately means it's relief for the markets because that's going to be a pivoting point for the market. So we kind of had to grind our way through it. We could have a technical recession this year by the second quarter end because the first quarter was negative by 1.5% on our GDP. Potentially this quarter, but most economists are forecasting a recession for next year, so 2023. So we don't know if it's this quarter or next quarter, but what we do know is corporations are trying to adjust right now.
With all this going on, are you worried about it?
Actually not. What we do here is we have a solid process that gets us through. In fact, I've been through many recessions. This is probably your second recession since you've been alive. But it's good that you get to see it and experience it and go through it. And, there's life on the other side, right? And we all live through it. It's painful. We're going to have to adjust our lifestyle maybe in the meantime. But there's a tremendous opportunity. In fact, if we look at recessions, whether we're in a recession this time or not, since 1942, we always use history as our guide, and history is a great guide for us here to guide our clients, right? Navigate through this and explain exactly what's happening. So since 1942, if we look at the markets by the S&P 500, we've also seen 13 recessions in that period of time, okay? And there have been a bull market, right? There has been several bull markets through that period of time, and there have been several bear markets through that period of time. Some bear markets are not all in a recession, right? There's more bear markets than just a recession. So that's where the question mark is. Are we a recession? Is it a bear market? It is a bear market right now by the technical definition of the S&P closing below 20%. So it's 20% or greater, and we've seen that 24% for the S&P, and the Nasdaq's 34%. So we've seen a lot of pain this year. On paper, again, our clients, we have a sound process, we're disciplined. We take an opportunity to put cash to work in a market like this for longer term perspectives. We do have cash for our clients, so we're welcoming when quality, we call it quality on sale. It's almost no different than what we see, great opportunities out there. But, the stock market's the only market when people are upset when it's on sale, unlike when you got Nordstrom's right over here, and when you see a deal and you go in and say, hey, Mom, Dad, guess what I bought? But I bought it on sale, and you come home and tell us that's, you're happy about that. Well, we're buying assets that are long-term assets that are quality, that pay us, our clients cash flows and dividends. But it's not uncommon to see a bear market and a bull market. And ultimately, the bull markets are always fun, right? They last, everyone makes money because a lot of things go up for the most part. And the average of a bull market is 4.5 years, okay? And the average return of a bull market is 153.7%, okay, over this period of time. So the bull markets reward you if you stay in it, right? The bear markets, the average is 11.3 months, so it's less than a year. So bears don't last very long, but they create a lot of damage. Down 32% is down the average. Now I already said the Nasdaq and the Dow and the S&P are down. Nasdaq's in this range, right? More than this range. The S&P potentially has more room to go. I talked about that earlier this week with Liz Clayman. So we got to see where valuations end up. I'm not worried because ultimately, again, we own quality businesses that are well run, that are best in breed. But ultimately, when there's a recession, Taylor, the businesses and the executives have one responsibility, ultimately, obviously to their customers, but their shareholders as well. And what they're going to do when we go through recession is they're going to tighten their belt. They're going to look at opportunities to eke out quality of earnings going forward, get through this period of time, look at supply chain a little bit differently for the long term. It's going to add tremendous value. And this is an opportunity for them to get more profitable, but also they'll stop hiring and they'll start laying off. They'll ask more of their workers with less workers. Ultimately, that's what's happening in the U.S. economy right now with the inflation, but corporations will tighten their belt. And ultimately, the top lines are growing. So the second quarter earnings report we're expecting for the S&P 500 is another 10% top line growth. So you know this from economics. The top line's growing. The middle, right, the SG&A and all of that in the middle, the cost of goods sold, that's what's also growing as well. And so the bottom is shrinking. So the profitability to the shareholders, to the business owners is shrinking. But that's only a period of time because why? They'll basically start figuring out how to manage their costs because earnings are growing. For this year, the S&P is supposed to grow by 10% on earnings top line. Next year, the S&P earnings are supposed to grow by top line 10%. Now, those could come down ultimately, but that's where the current estimates are. But we have confidence and faith that corporate America has done this, especially for the last 13 recessions and since well beyond or before 1942. Long-term, long perspective. It's just the way to sort of lick through this right now. And we'll get there. We'll do it. We always do. How we see things playing out, valuations could be a little bit higher than where they are right now, so they have to come down. Markets might, settle in over the next, we got to get towards the, let's call it the election cycle. So September, October, elections bring certainty to the markets. And I explained that more in my outlook, mid-year outlook that I just filmed yesterday. So if you want a link to that, please let us know, anyone on our team, and we'll get you a link to that 45-minute mid-year outlook for 2022. But that's our update for today. Ultimately, you have a long-term perspective. The best part is, I think I want to share this with you, is that in the 42 years, we've also seen 32 times where the market's drawn down by 10% or more. So it's not uncommon to see market drawdowns. But the 1 year average after that, once you get past that, is up 24%, just under 25%. The 2 years after that is 17%. The 3 years average is 12%. So again, long-term perspective, ride out, own quality, rebalance the portfolio, diversify. We're putting our cash to work. And so we love it when things are on sale. So I hope you learned something today.
Yes, I did.
All right. Well, we're going to put her a lot more to work right now, but and we'll next update we'll spend some time interviewing Taylor and getting to know a little bit more about Taylor. But that's our update for today. Thanks for watching, and Taylor, thank you for being my special guest.
Thanks for having me.